Okay, so let's continue with question 4. Right? We are still solving questions. We solved so many questions in other videos, and we'll still solve more questions because the best way to be good at something is to keep practicing and then practice and practice. Right? So those of you who want to write your ICAG exams, who want to be chartered accountants, your ACCA exams, your CFA, your CPA, your ICAN, whichever exams that you want to write, whether you are a student, an undergrad studying financial reporting, right? Not only financial reporting, the best is, or the best you can do to help yourself is to practice questions, to solve and practice more questions, right? So the more questions you solve, the better the understanding, right? And that's what CN Professional Institute, that's what we do. We make sure that we teach well, we help our students, and then they really get everything. And so we are going to solve more questions and practice, right? So just be with us, and then you really get everything, you really understand what we are doing. But if you've not subscribed, then please do that. You can share with your friends, and then they will also what benefit. So let's continue with question 4, right? So question 4 says, CNP Limited has the following units in inventory at the end of the year, right? At the end of 2023. They have the following at the end of 2023. Okay. So we have raw materials, right? We have raw materials, 6,000 units, cost per unit. We have work in progress. We have the units and then the cost per unit. We have finished goods, 2,000 units, cost per unit, right? Very good. And then we are told that finished goods usually sell for what? 50 cedis per unit. So that's the price for finished goods. 400 units of finished goods are found to be damaged due to improper storage and are estimated to be sold at 60% of their normal selling price, right? Now, you see, the normal selling price is what? 50 cedis, right? But we're told that for finished goods, 400 units are damaged. So out of the 2,000, 400 are what? Damaged. And that 400 damage could be sold at 60% of the normal selling price. What's the normal selling price? 50, right? So if you find 60% of the 50 cedis, you get 30 cedis. So it means that the finished goods, the part of the finished goods, the 400 units of the finished goods that are damaged will not be sold at 50 cedis. Are you following? The 400 units of finished goods that are damaged, those 400 units will not be sold at 50 cedis, but will be sold at 30 cedis. Because the question, they'll be sold at 60% of the normal selling price, 60% of 50. And when you find 50% of 60, sorry, 50, sorry, let me wipe it and rewrite again. Okay, so I'm saying when you find 60%, okay, times 50, the answer will be 30. So it means that the damaged goods, those 400 units that are damaged will be sold at what, 30 cedis instead of what, 50 cedis, right? Then it costs to sell 5 cedis per unit, simple. And then a further 5.505 cedis, 50 pesos per unit is still to be incurred to finish the work in what? Progress, right? So this 5.5 is cost to complete. Cost to complete. And then the requirement of the question is what? Calculate the value of inventory to be stated in the financial position of CNP Limited at the end of 2023. So very simple, we are going to value them separately, right? We have to value the inventory separately, very simple. So we have to pick raw material, value it separately. We pick WIP separately and finished goods separately. So let's start. So let's start valuing them. And this question, or question number, question 4, if I'm right, yes. So question 4, so we can write the heading up there nicely. So this question 4, okay. So Question 4. So question 4. Okay. So let's start the valuation. We value them separately. So we have to value, let's value raw material first. So let's pick raw material. Let's pick raw material. So raw material, with this raw material, we have the cost to be there in the question, right? So this raw material, we have cost to be how many units do we have? So you see the total units of raw material 6,000, right? It's there. So the cost is 6,000. Then we multiply by cost per unit, 25 cedis, right? So once again, let me put a CD sign here because our computations are in the Ghanaian. Our computations are in the Ghanaian city, right? Yes, that's where we're working. Okay, so let me come here and then copy one of this and then put it up there, right? Okay, so raw materials, we just have to pick the cost, multiply the cost per unit by the total quantity, and then we are done, right? Okay, so we have the cost per unit to be 25 cedis, total quantity 6,000. We multiply, and then we have 150,000 Ghana cedis. So this is the total cost of what? This will be the total cost of the inventory. So 150,000. Okay. Then the NRV, let's come to the NRV of the inventory. We don't have NRV of the inventory. So with the inventory, the NRV is missing. So there's a question mark. We don't have NRV. Are you following? We don't have selling price of what? The raw materials. And I'm saying don't use these 50 cedis. This 50 cedis is the selling price of the finished goods, right? So that's not the selling price of the raw material. So don't forget that. So the value of this inventory will be the cost because we don't have the net realizable value or we can't obtain the NRV, right? So we have to use the 150,000, that's the cost, as the value of the raw material. So this is the value of the raw material. Okay. Then let's go and value the next one, work in progress. So once again, as I said, the items there, right, are for the selling price and stuff, are not for raw materials. The selling price for finished goods. Now let's go and value the work in progress. So the next thing we're going to value is our WIP. Our WIP. Right. So let's go and value the work in progress. Okay. So with the work in progress, the same thing. Let's look at the cost. So we can easily get the cost of the work in progress. Right. The cost is the work in progress. You see that it's 35. Right. So let me change my color that I'll be drawing with. Okay. So the work in progress is that we have the cost to do what? 30, right? 30 cedis per unit. So multiply by the 2,000. So for work in progress, we're going to have 2,000, right, by 30. And that will give us 60,000, right? So that will give us 60,000 as the cost. Then we come to the net realizable value, the NRV. The NRV. Now, so we said with work in progress, we have cost to what? Complete of 5.5. This figure here, right? The 5.5 is the cost to complete. We can factor it in. And when we factor it in, we are going to use the selling price for the finished goods, right? So with this one, the work in progress is not damaged, right? So we are going to use the what? The 50. This one, we are going to use the 50 as the selling price. I told you that for the damage, we can sell it at what? 30 cedis, right? That is 60% here of 50 give us 30. So with the damage, we value it at 30. But the work in progress is not damaged, right? So we have to use the normal selling price. Okay. So our sales proceeds or amount to be realized from selling will be the 20,000 by how much are we selling? 50. I'm saying I use the 50 because the work in progress is not damaged. So we use the normal selling price, right? It's the damaged one that we sell it at 30 cedis. So we multiply and we get 100 cedis, 100,000, right? So we multiply the 200 by the selling price. Then we have cost to complete. Yeah, we said for work in progress, we bring in cost to complete, right? So cost to complete, that's 2,000 by 5.5, right? So 2,000 by 5.5, which will give us 11,000. Okay, and then we are deducting, so we're doing the selling price, then we less cost to sell. So don't forget, we said the net realizable value is the selling price, less cost to sell, less cost to complete. So we've taken our cost to complete, then our cost to sell, cost to what? Sell. Okay, will be 2,000 by, what's the cost to sell? 5 cedis per unit. So 2,000 by 5, and that will give us 10,000, right? So we have that. So just subtract, sorry, we underline, subtract, and then what we get is the value for the net realizable value. So this should give us 79,000 if my computation is right. So 79,000 here is the net realizable value, right? So comparing the two, right, the cost, okay. So let me just bring some things here. So we see cost is 60, net NRV is what? 79, right? So what value are we going to record in the books? The lower, which is what? 60. And once again, your net realizable value, right? So you can do your NRV like this, net realizable value, because you can just bring the 50 selling price minus cost to complete 5.5 minus cost to sell 5, right? And then when you did that, you get 39.5 and multiply by what? The 2,000. This also going, so somebody can do the NRV in this way, right? We'll pick the selling price 50 minus cost to sell 5 minus cost to complete 5.5 and we'll multiply it by what? This 2,000 is the same thing, right? But I'm just working in 2,000. Okay. So let's continue. So we said the value here. So let me wipe this one. So we said the value will be the lower, right? So value, the value we are going to use the lower. of the two. And what's the lower of the two? 60,000. Okay. And that's the lower of the cost and the net realizable value. So I said cost is 60, net realizable value is 79. So we pick the lower. Then let's go and value the finished goods. Let's go and value the finished goods. Okay. So then when we are done valuing the finished goods, we can now add the three. Okay. So finish goods. So with the finished goods, we have how many units of finished goods do we have? So okay. Okay, so with finished goods, okay, how many units? We have 2,000 here. We're told that what? 2,000 units, right? But 400 here were damaged. So if you have finished goods, 2,400 are damaged. How many will be undamaged, or how many are not damaged? 1,600, right? So you have to value the 400 that's damaged separately, and then the 1,600 that's also not damaged. You also have to value them all separately, right? And I'm saying that the one that is damaged, because it's damaged, the standard says, or the question said because it's damaged, which it will be sold at 60%. Okay, of the 50, and then 60% of the 50 is what, 30. So if you are valuing the finished goods, the damaged one, the selling price will not be 50, but it will be 60. But the one that's not damaged, they are undamaged, will be valued at 50. Right, so the finished goods, let's divide it into damage, and then so let's value the one that's damaged first. Right. And damage, how many units are damaged? We said 400. Because it said 400 units are damaged. So let's value it 400 units. Okay. So with this 400 units that are damaged, let's get the cost. So what is the cost? It's our cost to be the 400 units times the cost per unit. What's the cost of the finished goods? 35, right? 35 cities. It's here. Then we multiply. So 400 by 35 will give us 14,000. So we have 14,000 as the cost. Then let's go and then work the NRV, right? So let's go and work the let's go and work the net realizable value. So with the NRV, with its NRV, what's the selling price? So that will be the 400,000, 400 units that we are, the 400 units by what's the selling price? By 30. I told you already that we are not going to use the 50, the normal selling price. The question said to be sold at 60% of the normal. So we got 30. So by 400 by 30, and then 400 by 30 gives us 12,000, right? Then we said we less cost to sell, right? Cost to what? Sell. And that would be 400 by, it's given per unit, right? So what's the cost to sell 5 cities? It's in the question. 5 cities, right? So 400 by 5, and that will give us 2,000. So we have to take 2,000 from it, right? So here there's no cost to repair and stuff. The cost to repair is not given. right? If cost to repair is given, we have factored it in, but there's no cost to repair the damaged unit. So we just underline, right? We deduct this from this, and what do we get? So if we deduct, we get 10,000, right? So that'll give us 10,000. So comparing the cost, the damaged, right? Comparing the cost 14,000, right, with the NRV 10,000, which one do we record for the damage inventory? You have to record the lower. You have to record the 10,000, right? So don't forget, we have to record the what? The 10,000. So the value will be 10,000. Okay. So value 10,000. So with the damaged, the value is what? 10,000. We are still working on what? The finished goods. So we said the finished goods, they are in parts, right? It's 2,000, but 400 is damaged. So we are valuing the 400 damage separately. We got the value to be 10,000. When we are done, we come and value the undamaged, the part that is not damaged, right? The 1,600. So let's come and value the undamaged, the part that's not damaged. Okay. So with the undamaged part, okay, how many units are not damaged? 1,600, right? So 1,600, and you know how we got the 1,600? Okay. Total for the finished goods, the total unit is what? 2,000. But out of the 2,000, 400 units are damaged. So the remaining 1,600 are damaged. So the cost of the 1,600 units will be 1,600 by cost per unit 35, right? And that gives us 56,000. Then the NRV, the net realizable value, is 1,600 by, okay, so let's do it this way, selling price first, or the sales proceeds, right? 2,600 by what? The selling price, we are going to use 50. Don't forget, this one is not damaged. The one that was damaged, we used the 30. This is not damaged, so we are going to use 50, right? So 1,600 by 50, which is 80,000, if I'm right. Then cost to sell, that will be 1,600 by, what's the cost to sell? Okay, it's rather cost to sell. What's the cost to sell 5 cedis? It's in the question, if you can see, it's there, 5 cedis. Okay, just scan through, it has been aligned here, 5 cedis. So we just have to multiply that 1,600 by 5, and then I'm seeing something like 8,000. No, I hope I'm right. I'm getting 8,000 on my calculator. Okay, so if that's it, then I have to deduct this one. I have to subtract, and then what will I get? I'll get 72,000 as the net realizable value. 72,000 as the NRV. So I have the net realizable value to be 72,000. So let's compare the cost, right? You see that the cost is what? 56. Okay. And then the NRV is 72. Okay. Yeah. So, and then again, somebody can do the same thing as I said to get the NRV. Right? Somebody can just do it. Pick this 35, selling price. Sorry. Somebody can pick to get the net realizable value, this 72,000 that we got. Okay. This 72,000 that we got. Somebody can do it this way. We'll pick the 50 selling price less 5. You get 45. Then 45 by what? 1,600. You still get this 72,000. Right. So we are done valuing the finished goods. So we just have to put them together. And that's also the value here will be. So what will be the value for the undamaged? Right. So what will be the value for the undamaged? The value will be the lower, which is 56,000. So 56,000. Right. That's the lower. So this is what we are going to use as the value for the undamaged. Right. That is 56,000 as the value for the undamaged. So now we are done. So let's go and sum everything together. So we started here. If you look at it, raw materials, it was valued at what? 150,000 because we had no NRV. So raw material, we pick 150,000. Then we came to work in progress. Work in progress, we got what? 60,000, right? We got 60,000 work in progress. Then the finished goods, it was divided into two parts. The damaged, we had 10, no, the damage was 10,000 as the value, yes. The damaged, 10,000 was the value. Okay, 10,000 was the value. And then the undamaged, 56,000. 56,000. So yes, these are the figures we sum up to get the total value of inventory. Total value of what? Inventory. Okay. So let's sum them up. We say we are going to sum 150. We are going to, question first starts here. Okay, for 150 for raw materials. Work in progress 60. Finished goods damaged 10,000. And then the undamaged 56,000. So let's put them together to get the total value of inventory. Okay, so total value will be equal to, so we are going to have the WI, work in progress 150,000 plus raw material, we said 60,000, then plus the finished goods, the damaged 10,000, then plus the undamaged 56,000, right? So these are the figures we put together, and then we sum everything, and that gives us 276,000, if I'm right. 276,000. Okay. So finally, this is the value of inventory that we have to record in the books. Very simple. Just know that you have to value them separately, right? Value raw material separately, work in progress, value separately. And then we say when we are valuing work in progress, here we bring in the cost to what? Complete, right? Cost to complete, which is the 5.5. If you're valuing finished goods, we don't bring cost to complete, but sometimes you bring cost towards repair. And then the finished goods to 400 units were damaged. So we value the 400 damage separately. Then you come and value the 1,600 that's not damaged separately. You put everything together, and that is that. Okay, let's look at question 9. So this question 4. Let's look at question 9. Okay. Okay, let's do question 9 on fresh something something. Yeah. Okay. So question 9. Good. So you can have a look at it well before we. So let me zoom it down small. Okay. So it says Groove Lord OT Limited. Groove Lord OT Limited. Otabel Limited. Makes one standard article. You have been given the following information. So you have been given the following information. The inventory sheet at the year end show the following items. So we have raw material, 100 tons of steel. Cost per ton is 140. Present price per ton is 130. Finished goods, 100 finished goods. Cost of material is 50 cedis per unit. Cost of labor is 150 per unit. Selling price is 500 cedis per unit. Then we have 10 damaged finished goods. So 10 units of the finished goods out of the 100, 10 were damaged. Cost to rectify the damage is 200 cedis per unit, and selling price is 500 cedis per unit when rectified, right? Manufacturing overheads are 100% of labor cost. Selling and selling and distribution expenses are 60 cedis per unit. And this is from the notes 1 and 2 state the amount to be included in the statement of financial position of Good Lord OT Limited. In respect of inventory, state the principles you have applied. We are applying the principles of IAS to inventory. So yet you have to value them separately. We have two material and two inventory here of raw material and of finished goods, of raw materials and of finished goods. Very good. So that's it. So let's come and value them separately. Okay. Let's come and value them separately. So let's start with the raw material as usual. First things first, right? The one that comes first, we value it first. So let's start with raw material. So let's value raw material first. Okay. And then as usual, let me see if I can get my Ghana city sign there. Very good. So now let's cut it. So raw material, it says we have 100 tons of steel. The cost per ton is what? 140. So very simple. To get a total cost, right? We just multiply the 100 tons by the cost per ton is what? 140. So multiply by 140, and then we have our answer, right? Okay. Now 100 by 140 should give us 14,000, right? Should give us 14,000 Ghana cedis. Okay, then we have um what about the NRV of the raw material, net realizable value? Now the NRV here is nothing cannot be obtained because see, if you remember, you see, we're told that see, the price per ton is 140, right? That's the cost price, amount it was bought. This is the present price is 130. So it was bought at what? 140. But if you should buy it now, you buy it at what? 130, right? Now, if you remember again the principle, it says the rule is lower of cost and net realizable value, non lower of cost and then some like replacement cost or something. But look at something. The standard said, and then we learned that, or we looked at that in the previous videos, that it says raw materials are not supposed to be valued below, they are not supposed to be written below their cost if the finished goods that they form part of will be sold at a profit, right? So here, we have not really valued the finished goods already, but look at it. Look at the finished goods, look at the selling price, right? We have 150, I'm sorry, this labor. Selling price is what? 500 per unit, right? Compare with labor. What, how much is labor? Labor is 150. Okay. Material is what? 50. Making what? 200. Then it is overhead 100% of our labor. So mean that overheads, manufacturing overheads will also be what? 150. So 150 plus 150 making what? 300 plus 50 will give us 350. So total cost is what? 350. We'll work it out, but total cost is what? 350, right? That's total cost of the finished goods. And we're told that the finished goods are normally sold for what? 500 cedis here. Are you following? So it's even here, yes. And then selling price. Okay, so selling price 500 this year. Finished goods are sold at 500. So you could see that the finished goods will be sold at a profit. I get in what's the profit? 150. Because the total our selling price, we will do the workings again, right? But so our selling price is 500 and our total cost is 350. So 500 minus 350. I following. Suppose something like what 150. So we have a profit of 150. So it means that the finished goods are sold at a profit of 150. So we don't have to write the inventory below the cost, right? So here the inventory, I'm sorry, this raw material will be valued at, so the value that we are going to give to this raw material will be the, um, we will give it a value of what? 140. The 140 is what we are going to use as the value because one, there's no net NRV. And the standard said we should not write down the inventory below the cost if the finished goods that they form part will so that the profit. That's what it means. You have to go and then check its finished goods and see if it will be valued at a profit. If it will be at a profit, then don't write the raw material below the cost. That's what the standard said, right? So we said even if the 130 is even a selling price, even if the 130 is a selling price, right? The standard says we should not write down raw materials below the cost if the finished goods that they form part will be sold at a profit, right? So there's no way we have to write this inventory below cost. Are you following? So that's that. The 130 here, this 130 here is the cost price, the current cost price. It says present price per ton. Even if you've taken that the selling price, right? Even if you've taken the 130 as the selling price, you will still use the 140 because the standard said clearly that we should not write down inventories below cost. Below what? Cost. And then the cost 140. So it says we shouldn't write it below 140 if the finished goods that they form part will still at a profit, right? So raw materials will be valued at 14,000. And let's come and check the finished goods. Okay. Let's look at the finished what? Goods. So now with the finished goods, okay, if you look at the finished goods here, it says 100 units of finished goods. Cost of material is what? 50. So cost of material is 50. Labor is 150. And selling price is what? 500 cedis per unit. And then we're told that manufacturing overheads are 100% labor cost. Selling and distribution expenses are what? 60. So this 60 is what? Cost to sell, right? So in this case, the finished goods are manufactured. They are not purchased. They are manufactured. So we have to get the cost ourselves. Are you following? So the cost, we have to determine the cost ourselves, right? We don't have the purchase price and stuff so that we start doing our stuff. So we have to get the cost ourselves. And here we said it's manufactured. So if this inventory is manufactured, what goes into the computation of cost? So we have material, direct material. If you remember, in the question, the question said direct material is, let me use something different. So since direct material is 50, it's here, right? 50 something per something. So I'll just come here. My direct material is 50 and it's per unit. Then the next item I'll bring there is, then we also have labor. Labor also 150. And then manufacturing overheads, right? The manufacturing overheads. So our M overheads, okay. The M overheads 150. The M overheads 150. So we have this now. Why? It says manufacturing overheads are 100% of labor, 100%, right, of labor cost. So 100% of 150 is still what? 150, right? So it means that the manufacturing overheads and then the labor cost are the same. So when you sum this, okay, you get 350, right? You get 350 cedis. And this 350 is the cost per unit. Don't forget, right? What we use per unit is 50, and then the 150 and the 150, they are all per what? Unit, right? So this is our cost per unit. Okay, so cost per unit. Okay, so we have 350 cedis per unit. So this is a cost per what? Unit of the finished goods. So the issue is that in this case, the cost of the finished goods is not given. So we have to compute our own what? Cost of the finished goods before we go and value it. So we've gotten the cost of the finished goods. Now let's continue. We're told that then, okay, so with the finished goods, how many units? 100 is here. Okay. Wow, we have 100 units. Finished goods, 100 what? Units. But it says 10 damaged, 10 are damaged. Right? So if 10 are damaged, then 90 will not be what? Damaged, right? So let's value the damaged 10 and then we're going to value the undamaged 90. Hope you are following. So with the finished goods, let's come and value the damaged. Okay. Let's value the damaged. So with the damaged, what's the cost? So how many units are damaged? It's here. The question said 10 damaged finished goods here, right? So this one, 10, this 10. So 10 units. So that'll be 10 units by what's the cost of each? 350. That's what we just computed, right? So this 350 that we just computed here, this 350 that we just computed here is the cost per unit. And that's what we are going to use in our computations, right? So you do this, and then what do you get? You get, so that's 10 by 350, and that will give us 3,500. 3,500, right? Then we have to get the NRV of the damaged. NRV. So the net realizable value will be the selling price, right? So NRV selling price. Now, it says 10 finished goods are damaged. Cost to rectify 200. So 200 cedis will be incurred. And then selling price of 500 per unit when rectified. You see, the normal selling price is 500. We have two. We have one 500 here and another 500 here. The normal selling price is 500. So we use the top one, this normal 500 up here, right? But that's what this normal 500 here, that's what we are going to use if we are valuing the undamaged. And then with the damaged, we are going to use this one, right? Because it says 500 per unit when rectified. So this question, we are fortunate, both are the same, 500, 500. But if they are different, if you are valuing the damaged, come and use the down one here, this one, yeah, the one here. Okay. Okay. So it's 10 by how much will it be sold? Right. That's 10 by 500 cedis. And then we are going to get 5,000. Then cost to rectify. I think some cost to rectify then. Cost to rectify or cost to repair the damaged one. We said 200 units. The question said 200 units, right? So 10 units times 200 cedis. The question said we will incur 200 cedis to rectify. It's here. This one, 200 cedis to rectify. So 10 by 200, and then I'm suspecting 2,000. Then we will less, so we are less in this one. Selling price, less cost to sell. Then, okay, so this is cost to rectify. So let me say cost to repair or cost to rectify. And then lastly, we will deduct, okay, so let me bring the damage, let me bring everything down here to the next page. Okay. Then we have cost to what? Sell, right? Cost to sell, CS. So CS, cost to sell, we are selling 10 units, and then we will incur selling cost of what? 60 cedis is here, right? Here, this one, this figure, 60 cedis, selling and distribution. So we will incur 60 cedis in order to sell. Okay, so we deduct this by this, should give us 600. Okay, so we have to less underline this one and less. What are we going to get? And that will be the NRV for the damaged. Okay, so we have 5,000 minus this will give us 3,000 minus 600. Yes, 600. Okay, so I'm expecting something like 2,400 as my damaged. Right. So 2,400 cities. So this is the value for the damage. So comparing the two, okay. Comparing the two, cost 3,500, NRV 2,000 what? 400. What value are we going to record? What value are we going to record in our books, right? What value are we going to record in our books? We are going to record the lower, right? So we have to value this one at the lower, which is the 2,400. So the value will be 2,000 what? 400. So this is the value for the damaged. Then let's go ahead. It's still on the finished goods. Let's go and value the undamaged. Okay. So with the undamaged, we said so with the undamaged, how many units? You see, the finished goods, we have 10 and so we have 100 units, and we are told that 10 damaged. We are down valuing the damaged. The undamaged will be 90. I following, because if 10 are damaged, then 90 will be what? And damaged. Okay, let's continue. So we have the cost, that will be 90 by that's 90 units by the cost 350, right? So 90 by 350, okay, and then that will give us 31,500. 31,500. So this is the value of, or this is the cost price of what? The damage. Then let's come and get its NRV, net realizable value. Then we compare. So NRV, 90 units, also 90 units. Then by, so let me bring it down here. Now, the undamaged, the normal selling price is what? 50. I said the one up here, the one at the top here. Okay, the one at the top here. The 50 at the, there's 50 at the top here. So that's the normal selling price. So that will be 90 units, and then selling at 500. So 90 units selling at what? 500. And then that should give us 45,000. Right? Then we have cost to sell, because this one is not damaged. So there will be not like cost to repair. So cost to sell will be 90 units by, our cost to sell in the question is 60. Okay. So 90 by 60, 90 by 60. And then we are going to get 5,400. 5,400. Okay. 5,000. So 90 by 65,400. And then we'll let it. Okay. So we brought the selling price. Less cost to what? Sell. And this is this finished goods. So there's no cost to complete. Right? And it's not damaged too. This one is the undamaged. So when we less this one, we have to get something like 39,600. Okay, if I'm right, 39,600, right? So 39,600. Then this is the NRV, right? So once again, comparing the two, somebody can do it this way again. Somebody can do value it individually first. So we'll pick the 50, the NRV. We'll pick the 50 CDs minus the cost to sell 60. Are you following? And then we'll get something like 440. And multiply the 440 by the 90 units, right? By 90. So 500 minus 60 by 500 minus 60 by what? 90. You still get the same answer. Fine. That's your NRV. So now let's go back and then see what we'll do. So you could see that with the raw material, the value we are using is what? Yeah. Raw material, we are using 14,000 because we don't have any NRV. Then we come to finished goods. The finished goods, we are damaged and undamaged. The damaged is valued at 2,400, right? And then you said the damage is valued at 2,400, and then the undamaged is valued at 31,500. So let's come and enter the value. Let me wipe this. Then we can enter the value. So with the damage, the value will be so we're going to have the value is the lower, right? So the lower of this 31,500 and then 39,600. So it's 31,500. That's the lower, right? So this is the value for the and damage 31,500. So we just sum the three, and then we have the total value of what? Inventory. So the total value of inventory will be the total value of inventory will be the raw material, right? The raw material, what value are we using for the raw material? We are using the 14,000, right? So raw material, we are using the 14,000, then plus the finished goods, the damaged was 2,400, and then the undamaged 31,500, right? So just put them together, and then you get your closing inventory. And this should give us 47,900, if I am right. Okay, but like you just have to understand the concept. Okay, the understanding is the most important thing. So let me punch my figure again: 14,000 plus 2,400 plus 31,500. Okay, so 47,900. So this is the value of inventory that we are going to record in the books, and this figure includes everything. Okay, it has 14,000 for work in progress. Sorry, 14,000 for raw materials, 2,400 for the damaged inventory, and then 31,500 for the undamaged inventory, right? So that is what you have to know is that in this question, it's a very nice question. You have to compute your own cost of the inventory, then you move on and value the damaged and then the undamaged separately, right? Very good. And then the first note, the raw material, to be very careful. We'd have to write it below the 140. Okay. Then finally, let's look at so this question 9, then question 18. Well, for question 18, I'll not solve it. I'll just give you the answer. Then you try and compare, right? But question 18 is very, very simple. Very, very simple to solve. Okay. So it's also like the manufacturing, right? You've manufactured the inventory. It's like it has been what? Manufactured. Okay. So we can scan through it. It says so Gloria Limited paid 3 CDs forward. Paid 3 CDs per unit for raw material, right? To complete this, Gloria must incur 2 CDs direct labor. Production overheads for the year based on normal output of 12,000 units are 72. thousand. So just like as you are reading, you know that this inventory is manufactured, right? So how do you get the stuff? So this is very simple. You first of all, we have to get a cost, right? So what you can do is, okay, if that's the case, then we can do it this way. You have to find a cost first. So we are told that material is okay, let me bring my drawing. Okay, so you see material, right? Material is what? 3. Labor is what? 2, right? And then the overhead. The overhead, we said overhead is allocated using the normal level of production, right? So just the 72,000, right, divided by what? 12,000. And that should give you something like 6 cities, right? So just add 3 to 6, and you get 11 cities per unit. So this is a cost per unit, 11 cities per what? Unit. Then we're told that out of that, 10,000 units were produced and 100 units were in inventory. So out of the 10,000, they sold 9,000. So 100 was in inventory. And then even with that one, say some 200 units are badly spoiled. So these 200 units are damaged. So you just have to value them, value the 200 separately. Then when you are done, come and value the remaining 800. Because if you had 1,000 units in inventory, right, and 200 damaged, 800 will be undamaged. So come and value the 200 and the 200 units that are damaged separately, right? If you value that one, your value should be something like 2,000, okay, for the 200 units that are damaged. And then the 800 that are not damaged, you should get a value of what? 880 like this, right? So summing it should give you 10,800, right? So this is the answer. So go and try it, and then let me have your answers in the comment section. You can confirm and see, solve, compare, and see if you get a 10,800, right? So we've solved so many questions on subsequent measurement. I'm sure by now you are very solid, right? If you are registering, if you want to write your CA exams, your ICAG exams, your ACCA and any other exams, you can register with CN Professional Institute, right? We take our time, we teach well, then you pass. So no matter your level of understanding, so first you want to be a CA, and then you're writing your professional exam, you want to write your professional exam, register with, you can register with CN Professional Institute. We have so many questions we'll take you through. By the time you are done, you really get it, right? You really understand everything, right? Cut across FR, and that's financial reporting, taxation, public sector accounting, right? So guys, that's it. If you like the video, once again, please subscribe, share with your friends, right? And then I'll see you. We are not done, still not done with inventory. We have our cost techniques and inventory valuations, right? So I'll see you in the other videos.